I don't hear the music. Still nothing.
Oh, you couldn't hear that?
Mm-mm.
Oh, well, okay. The music played. I don't know if it's on the recording or not. The music's done. Go ahead, Mr. Shelton, with your intro.
All right, we're back with the Texas Oil and Gas Podcast. We appreciate you tuning in to today's episode. This is episode 213. 213. I'm your host, Josh Shelton, my friend and co-host, Ryan Ray. Ryan, it's been a while since we had a show, man. We actually missed a week.
I was on the wrong one. You can hear it now, can't you?
I can, yeah.
There it is. Yeah. I was on the wrong mic. You gotta let me know when you hear that big echo. That's the wrong mic. Okay. Yes. Well, yeah, I was out last week, wasn't I, Josh? I pulled a Josh Shelton. Went to DC, had a meeting with an ambassador, a couple of ambassadors actually, and a congressional staffer, and so just doing things like that. So it was fun. You were off the week before that, weren't you?
I was, yeah. I was actually sick that week. Ben Samuels stepped in for me.
Yeah, we had Ben in. So yeah, it's good to be back. Good to be back, and barring something unforeseen, we should be back on regular schedule here for some time now.
Yeah, well, Ryan,
which reminds me, two things. One, I'm going to link to this in the show notes. I have a new podcast out, Inside the War Room, and we are putting out, trying to put out 2 or 3, sometimes 4 a week. And so last week we did Dr. Paul Sullivan on climate justice. So if you're interested in that topic, he was there for that. We've also had one on the U.S.-Mexico border. Our friend Sergio Chapa, as you know, is writing a book on the border, and his co-author, or I don't know who the top author there is there, but anyways, she was on episode 33. We've had Anas on. Mark Rosano's coming on tomorrow. And we are also trying to get on, we had one on addiction. We've had European Energy, Carol Roth, the World Small Business, R.R. Reno, the Return of the Strong Gods. I don't know. We're 37 episodes in, so be sure to check that out. And there's something else I'm going to say about this week, and I can't remember what it is. I don't know. But check out the podcast. Drop a 5-star review. We're giving away a book, Spin Selling. So if you're interested in that. So anyways, there's something else, Josh. I can't remember. Any idea where I was going?
Did you hit the average review?
Hit the what's that?
We got a review from a northerner in the South, June 30th.
Oh yeah. I think we did read that.
Okay.
Yeah. I can't remember what it is now. Anyways, so yeah, be sure to go check out Inside the War Room. We cover all sorts of topics all over the place, and so I'd love to have you on over there as well.
Well, Ryan, we have news spreading around the world, the nation. The Delta variant, it's coming. It's here. We had
off YouTube already. Oh, that's part of it. Listen, I will link to this. This show is on YouTube exclusively now. We're not doing Facebook. We're not doing Twitter. We're on YouTube. We're trying to put out more YouTube content. We don't really push YouTube stuff, but we put out a lot of YouTube stuff. And so we're going to start pushing it some for several reasons. And the other thing, Josh, speaking of YouTube, is sponsorships. We are getting ready to roll out some new sponsorship programs. Josh and I were just talking about offline, but if you'd like to sponsor the show, Ryan at warroommedia.com is where you can hit me up to get that information. But anyways, looking forward to the new sponsorship deals we will be announcing pretty soon. So sorry about that. Go ahead, Josh.
No problem. All right. So Delta variant, it's out. Markets have been responding to it. It's been kind of up and down. I think oil ended up dropping like $5 last week with some of the news coming out with the Delta variant. News of vaccinated people getting sick was raising worries that this might squelch demand. Demand's been coming back. It's been ready to rip and roar, and now there's some hesitation in the market. But it seems that the oil is kind of hanging in there. 72 demand. I think we're at a point now where people are, from my perspective, it looks like people are not prepared to go back into that lockdown mode. They kind of just take some of the risks that come with living. So I'm hopeful, Ryan, that we're not going to, shut down again. I did see a report that came out where California, I think, is reissuing mask mandates. I think it was LA, and maybe kind of bringing some more restrictive measures, which that can have some impacts on the economy as a whole there. So it's something to watch. I think there were, Ryan, it's been a couple of weeks, so I've been following the news, and I don't remember what we have and haven't covered, but I do know that there were talks with OPEC to increase their production in order to lower, I think, gas prices. I think the Biden administration was wanting them to do that, and I believe we covered that at some length, because OPEC agreed to do that. Anyway, so that's kind of what's in the news now. Is we're just kind of watching, gas prices, oil prices, COVID. Those are the major things that I've seen. That how is this Delta variant going to affect us, and what's next?
Yeah, and so Ellen and I covered that as well on episode 163, I believe, of the Energy Week podcast. It's episode 163. I'll link to that in the show notes. As for what you're talking about, yeah, there is where we're at right now. When you look at like jet fuel demand, okay, so jet fuel demand. When I flew to DC, and I've only been to DC twice. My War Room road trip last year, and then this time. So I've only been twice. So this is very anecdotal evidence. But I can tell you that flying in this time, the foot traffic was substantially larger. It was more, a lot more people. It didn't feel like, and I was flying out of DFW and then back from DC. So both ways. Now, it wasn't a 2-hour wait or anything, but I flew out on a Saturday and I flew back on a Tuesday morning. So if in a non-COVID world, if I'd have walked into the airport, I'd have thought, oh, great, the lines aren't too bad. It's not too bad. It's not terrible. I wouldn't have thought anything else about it. So but demand's back on some level, right? I think the TSA numbers prove that out as well. So you can kind of walk in the airport, to your point, but you can kind of feel it's back. Now, jet fuel demand is really impacted by the long international flights, and that part of the demand is not back. And I don't think that's coming back until that you can go on vacation or you can go to Europe or wherever and get back and not have a problem. You have England's talking about some kind of vaccine passport or whatever it might be in the fall. France, the same thing. Well, as an American, how does that work? And so I think a lot of that stuff is going to kind of keep things stifled. The economy won't fully reopen until we kind of know what that's going to happen. And so, anyways, that's kind of my thoughts on. But I think the larger point, you will see there is a push to start the mask mandates back. So we'll see. To your point, if you're right or not.
Yeah, so that's going to be the question, I think, because if we go and then demand has been like really improving. Demand has really been recovering. And the question is going to be, are we about to go backwards or are we going to go forward? So just as you were talking there, Ryan, I looked up, about 30 minutes ago, NBC News put out the U.S. won't lift travel restrictions, citing spike in COVID Delta variant cases. They are discouraging travel to the U.K. because of the recent spike in the Delta variant there. So some of the travel is continuing to be restricted. So you're right about that. So you're going to see some more of that. Articles are coming out saying that all this Delta variant is really caused by people who refuse to take the vaccines. As they push that, we're going to see kind of what people do. Do people agree to get the vaccine to go along with it, or are people a little worried about some of the side effects and are not going to get it? So whatever position you take on that is the narrative that's being put out in the media, and seeing what's going to be the response of people, because if they do restrict travel, or if they take restrictive measures to make you get a vaccine in order to get to travel, then you're going to see people either get it or not. And that could affect the economy and as far as demand, because less people may travel in that circumstance as well. So,
and you're also, we're going to get into this fall here. And so theoretically, football will be opened up to all capacity. So, will you see packed stadiums across the U.S.? I think so.
I think so, yeah.
Right. So you'll see a little bit of pickup of people going back to school. So I'm kind of getting back to, we talk about the quote new normal. That's kind of the next phase, I think, is this fall, assuming we don't see the mask mandates kind of come back across the U.S., we start to see the U.S. looking like a fall semester looks like in the U.S. How does that feel and how does that work itself out? But again, I do think we are a little bit off before we start to see, the big long plans, the long trips, unless you have to go somewhere. So
yeah, I agree. I think I was a little surprised. So I watched the Wimbledon this year, and they had it set where they had to stay at 50% capacity for these places. And what they expected was that the folks in the crowds were, separate a good bit. What they found was that all these groups continued to sit together, and so they were 50% capacity, but they were all huddled in together, and so it kind of they hit a point where they ended up opening it up to 100% capacity. So and just seeing that people, I mean, even with the risk of catching it, people are ready to get out and have fun again, And I think SEC football, college football, all of that's gonna have a great year of attendees. I think people are ready to get back out and start enjoying stuff again. So that's good news. I mean, just seeing people out and having audiences again, man, it's been good to see. So hopefully that helps with some of the demand as well. So this article here we have from Oil Price. So this essentially, she says what I said earlier: oil opens lower as Delta variant fears clash with the tight supply. Again, I mean, oil, I think it got up to 75. I mean, we're at 72, so I wouldn't pay too much attention to that at this point. I would want to look to see, what the trends are for the next week or two. Ryan's school's supposed to open next month. That's going to be a big one. I mean, that would be huge if that goes through and they don't change the plans all of a sudden on us on that. I'm a little worried though. I mean, it's a lot of parents may not want to. I mean, if they force the kids to get vaccine in order to go to school, because I know they did that with some of the college campuses.
Mm-hmm. Mm-hmm. Yeah, and you mentioned let's kind of talk about where we're at. We've got school coming back, so you had the buses out, people out and about, moving stuff, college football, and then as you get to the winter, you'll have more. NBA will come back again. I guess I don't know if they're on a regular schedule or not, but NHL will come back. All those things will start to come back, and then you'll have holiday travel. So you kind of hitting this next phase is Q2. It's middle Q2, end of Q2, into Q3. You start. I'm sorry, Q3, Q4 rather, not Q2. You start to look at all this stuff, and then you say, okay, well, OPEC. To your point, OPEC has increasing production because they want to keep the price. And Nas, I think, says the sweet spot. You can go look at his pinned tweet on Twitter. I think it's like 68 to 74. I think is the sweet spot according to a Nas that OPEC wants. The U.S. production isn't really increasing. It's increasing some, not that much. I know we got a job market report here in a minute. So it's a deal where, if we can stay in this spot, this sweet spot, to use a Nas's term, 68 to 75 kind of range for some period of time, I think that's going to be good for service companies because they can hopefully get back to hiring people, get their rate set, get their rate probably raised from being decimated in 2020. Oil and gas companies and the frackers can get out there to figure out what kind of production they want to put online. And knowing what OPEC is going to do, and this has kind of been not talked about a lot on this podcast, I don't think, but understanding that this is what OPEC's going to do. They've been on this kind of monthly schedule, so you kind of know what they're going to do. It has kept a lid, I think, on the market from getting out of control, but it's also kept the floor as well because okay, OPEC is going to put out this kind of oil. They're kind of dedicated to working together. It seems they had a little tiff a few weeks ago. So the U.S. side is, can they get the money to produce? And they haven't we haven't overproduced. We haven't put the price back down. So it's really been, there's a lot of problems with financing and the ESG and all this stuff involved. But from a price standpoint, it's really been a pretty good year because, historically speaking, we would have, some people were concerned that we'd come out there and just drill this thing right back down to 40. And that hasn't happened. So, it might happen, but it hasn't happened yet.
Yeah, that's going to be the thing to watch because, I mean, where the prices are holding steady. I mean, this is kind of like what Anas said. I mean, this is where I think if people could pick a number for it to stay at for 12 months, it would probably be around this number, around 70. Exactly. Yeah. So I mean, it looks like it's holding steady. even with the end of the Saudis saying they're gonna up production and get an agreement to do that, it's kind of holding in there.
Yeah. So what would be bad is that with the OPEC the OPEC increases, if we did see kind of a lockdown again, or not necessarily a nationwide lockdown, but more than just LA County. You have lockdowns across the U.S. or across the world, and these are crushing demand again. Like that would be the bad part, because then OPEC would have to go back and revise their numbers. You kind of all the stuff we said that's going well would kind of then work against us. So let freedom ring, baby. Let freedom ring.
Well, here we go. So we have an article here. We've been kind of talking about BP for quite some time. They have been, I think, of all the majors out there, they have been one of the ones that have consistently been pushing, at least from my perspective, more toward going green than any of the others. They've really been at the forefront of the green movement in terms of oil and gas companies. And so article came out that I thought was interesting. BHP Group is considering getting out of the oil and gas in a multi-billion-dollar exit to accelerate its retreat from fossil fuels. They're estimating this would probably be worth anywhere from $15 billion, possibly a little bit more. And then it says here they are forecast to earn over $2 billion this year. So that's not necessarily profit. It's just the margins they're working with. So I'm curious to see this, Ryan, because it seems that they're having success, but they're still considering getting out of the oil and gas business, getting out of fossil fuels. One of the people said, one of the quotes here is, with rising ESG pressure facing industry, they're thinking about getting out, and they think that there's a possibility that this might be their best chance to still get a good price. So their outlook on oil and gas is bleak, and they think that this might be the peak. Oil's at 70 something. Sell now might be the best that they can do. So what are your thoughts, Ryan, on BHP taking this route? And do you think this is long term, you think this is going to work out well for them, or what do you think?
So BHP sold back in 2018, I think it was. They sold a lot of their stuff to BP, and so they've kind of been hitting this path. How much being based in Australia impacts this, I don't know. So I think when you look at these assets, these assets are going to move around. You're going to have mergers. You're going to have divestitures. People are going to pick up stuff. And where we're sitting at 2-3 years from now, I think we're going to look back at some of the stuff and go, wow, okay, these guys really jumped the gun, and these guys held on and made a good play. And so, being in the oil business right now is not the sexy thing to do, right? People are like, oh, oil and gas, but it's something that's needed. It will be needed. And so, if BHP wants to focus on their mining stuff, then so be it. That's fine. That's their decision to make. But that's also going to create opportunity for people who stay in the business. Unless you think oil is going away, which it's not, it's a good spot to be in.
Yeah, I agree. I think that's my thought. So I think there's a possibility that BHP may benefit from the ESG advantage they may get. So they may have more positive investments from some of these investors that are more open with their money because of the moves they made to get out of the oil and gas, out of the fossil fuels. So they may actually benefit from this. But I think just from a traditional, fundamental economic decision, I don't think that it's the best move. So apart from the benefit they would get from the ESG, apart from that benefit in the investors, I think that it's not a good investment move. But they still may have made the right call anyway, because of the reputation that they'll have from this decision. So, all right, we have one more article, Ryan, and this one is about jobs. Energy industry employment continues to grow slowly. So we haven't seen a big explosion. Texas Independent Producers and Royalty Owner Association released a report showing the upstream sector of the energy showed a net increase of nearly 8,800 direct jobs. So first half of the year, first half of 2020, they were showing a total of 168,000 jobs. So they've added 8,800 to that number. So in the last 3 months, Bureau of Labor Statistics said that the sector had added 24,000 jobs, which is a 1.3% growth rate. So again, nothing explosive here, but there is a steady increase in the job market, which is something that we are very happy to see. It was a tough year last year, so love seeing the job numbers increase. Hope that steady approach will continue. I don't want to see a huge explosion, because at that point, you're probably going to see the prices get drilled back down. So that's slowly adding on as the prices goes up. People are getting their jobs back. That's slow and steady over time. Hopefully will bring some balance to the market.
Absolutely. Anything else, Ben? Or is that it for today?
I think that's about it, man. There's
earnings are coming out right this week.
Yeah. So there is an article I have that we're expecting to see some earnings reports coming out this week, and that's going to be interesting to watch. So I think actually there's an article I have here. Oil and gas majors likely to report bumper second quarter earnings in the coming days, and with higher commodity prices, gas prices up, this will be one to watch, man, because this will tell you how these companies are doing. So I'm excited to see how those come out this week, and we'll be reporting on those next week, obviously.
Yeah, have a breakdown of the earnings. That'd be good. Okay, yeah, I think that is it for this episode. Nice, short and sweet. Be back next week. Be sure to check out Inside the Worm podcast. And until then, keep climbing.